You're welcome. Good morning. Hope everyone had a great weekend. Getting filled up here. I would have started talking a little bit sooner, but I had a surprise visit from T-Buzz. So I need to get that taken care of. Oh, I'm reading a bunch of stuff. Yeah. No. Adam loves the dashboard. Although it took me a minute to read it. I thought he was calling me a tool. So I was a little confused, but nope. XPEV? XPEV? ZPEV. They're still trickling in here. We only got 200 people in here so far. Thank you, Stephen. It's okay. We'll we'll make it. He was Stephen was giving me condolences for the Jaguars season. They lost on Sunday, so they're out. Henry, we are. Tom or T Buzz is like our office is here. Roger and I are in the same room, right across the hall. If the mic's sensitive enough, you can be able to hear it.
It's true. You can because he projects.
Yeah.
Good morning. Good morning, everybody. Hope everybody's doing well.
Nice. On time.
Yeah, look at that. We got Tim, Adam, Matt. How are you? Kirk, Jeffrey. We got Gary, Grandpa Gary. We got T here. We got another Gary. We got Bruce. We got Steven. We got Mister. Why do you use the 8 RSI? I don't use the 8 RSI and I don't use the 9 RSI. Good morning, War Dog.
Yeah, I don't-
Cyrus, how are you? Hope you had a good weekend. Frank, Gus, how are you? Yeah, he has a strong voice. He does. It carries. It definitely carries.
I
Howard,
do not use the 8 day.
we don't use the 8-day RSI or the 9-day RSI.
I use the 8 day EMA,
Right. EMA, not the RSI.
not the RSI.
Morning. Now, a question for you.
Oh,
Yes, go ahead.
he's probably asking about the Williams R, but I use a 5 day,
Yeah.
not an 8 day.
Thank you, Joe. So how many of you took the ooh, look at that.
Yep.
Get that from Deacon. That's good. Good, Deacon. Oh, good, Steven. I was going to ask you guys, did you make money on AMD? Did you make money on XPEV? If you didn't make money on XPEV, that's criminal. The stock was down 5%. Made money on both. On both. Okay. Good. And by the way, our other stock that I'm not going to name because it's right like a hair below the break-even price. So we're not like really like and we just put a new one in. Folks, do me a favor. If we're in a trade in the currently in a trade in the trading pit, out of courtesy to me, and nobody's been doing this, by the way. I'm just saying, moving forward, let's not discuss it here out of respect for the fact that you guys have paid a premium to be there, and some people here have not. So, just want to make sure. Just want to make sure that you know you guys understand. So you could talk about closed trades all you want, but if we're currently in two trades, so we're open right now, let's just for obvious reasons. It's good. It's just better for everybody. No problem, Gus. And if you were in the stock opened down 5% this morning. Those Chinese. By the way, did you guys hear what happened in China? There's some property issues there. There's some issues going on there.
Wait,
By
you say property issues? Do you mean like property rights?
real estate. No. They got more real estate issues over there.
Say property right problems in a communist country is a big shocker.
Right. No, no. Let me be specific. They are having some major commercial real estate issues. And I'll tell you what I was concerned about. I was concerned that it was going to bleed into the financials in the US and start undoing one of the stocks that we have. And it had nothing, didn't do anything. I don't know. Can you take a look at bank stocks, Matt? See how they're doing right now? Like BAC and Citibank and Wells Fargo, because they were on a tear last week.
They're all down.
Mm-hmm. Yeah, but see, insurance
Wells
stocks are not.
Fargo,
Mm-hmm.
well,
Yeah. Okay. Okay.
JP Morgan's down.
Good to know. Good to know. Well, my wife finally got back from her ski trip. She's back home. Things are back to normal now.
Regional
Uh,
banks aren't though.
no, that's good. Good. And folks, we got earnings this week. Now, I don't know if you guys good. Hey, that's great, William. If you'd like, Cam is awesome. If you could send a nice email to me regarding Cam. I get a lot of great emails from you guys daily. But if somebody in customer service or if Matt or if somebody else did a good job, let me know. I'll post it in the Telegram channel that we have internally, and it makes them feel good. It's just a nice thing to do. Because remember, I'm not the only one here. We have over 100 people supporting me and Matt, so it's a big ship. Not just ourselves, but T Buzz and others. It's a rather big company. Admiral as their new defense. John says several years ago they built several complete large cities to prop up the economy, and they are still empty. Yeah. Oh, thank you, Stephen. Those were people that were in town actually, from other places. That's all. Everybody you saw in the cupcake video. That's the copyright department. They write all the emails that you guys read. Absolutely. That's right, Rick. Absolutely. Okay. So the first thing I wanted to do is I wanted to talk a little bit about earnings. Now, let me see if I could do this right now real quickly because it's about to start. So how about we do this? Because because they're not here just yet, we still have a few days. I'm only going to focus on these right now.
You're not sharing your screen.
I know, I'm about
Okay.
to. I'm about to. Thank you for bringing that up. Nice, Vivek. Glad to hear that. Thank you, Kurt. They've been busy because we've been getting a lot of. They've been busy because the business has been getting busier and busier and busier as the market gets better and better and better for obvious reasons. But this is where the money is, guys, this week in terms of earnings. And I'll talk about market caps and all that other good stuff. But Delta, airlines. So you got airlines and banks, mostly financials. But typically you have airlines, banks, and healthcare all coming out about the same time. Okay. So expect this. So we're gonna really start looking on Thursday. Taiwan Semiconductor. This is a big company. Why is it a very big, important company? Because this is a manufacturing company. They manufacture parts for other chip stocks. So what happens with them is a lot of companies are very dependent on them. So we're going to have to watch this very, very carefully. Thank you for saying that, Terry. That's great. Go ahead and copy that too. The thing about Tony. That's good. Good, 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 good. This is good. This is what I want to hear. So we'll be watching very closely. In terms of how those sectors are doing right now, let's just look at bar chart real quick since I have it up here. Let's look at financials. That's why America is building so many other factories. Maximiano, you want someone to contact you? Let us know what you want because you just posted your email for everybody. So just want to make sure that we know what you're posting your email there. Okay, so look at the financials. They're not as perky as they were up here, but they're not looking so bad either. I do think a large portion is already priced into the price, but again, we're still moving in the right trajectory. still moving in the right trajectory. I can't say anything negative about it. Healthcare, I recommended healthcare a few days back. I said that blue chips are going to be leading, and they've been doing really well. They've been holding up. Now, this is bullish. When you see something like this, now it's hard to say it's been bullish because, well, no, it's not. Because look, here's the stock market. We've had a couple of down days now, but no down days at all. And this consolidation is good. I actually like the sector. I may want to buy this in Bargain Hunter. This is very strong. This is a very strong uh, move. I like this quite a lot. The market, I can't say the market is consolidating. The market's right now back testing. The market right now is going to try to back test the high, I think. What does your program have to do with us, Maxime? Why are you giving us your email and your I have what business market trader webinar? I have no idea what you're talking about, Maxiamo, but do me a favor, don't spam stuff here or we'll ban you from here. My folks are interested in stocks, not Bitcoin. So just FYI. So no more spamming, please, Maximiano. Okay. So healthcare sector, and let's look at consumer staples and see how they're doing. Not as good as I would want to see them, and they're bouncing off the 200-day moving average, which is not a bullish sign right here. But the trajectory still looks pretty good. Trajectory still looks pretty good. I have no idea, Betty.
It's support staff.
Oh, the Tonian support. Okay. That's it. All right. Good. Okay. So now let's look at the broad market. Let me actually my other program for. All righty. If you look at the spider, and this is the spider right now, on a daily, we're trying to cross back above the EMA. The key, what the market's going to try to do right now is the market is going to try to back test this area and see if it can gain some air coming back to see if it can make an all-time high. I think largely whether it goes back up and makes an all-time high, and this was a rather nice little shakeout right here. Broke the downtrend right here. And I think one of the things that's going to be dependent is whether or not, thank you, Billy, is whether or not the CPI and the PPI report this week comes out positive or negative. Let me just go. By the way, Matt, make sure you're manning the YouTube channel.
Yep.
Good man. So here. This week, this is going to be a really big report. And you're going to have the PPI, and then you have a bunch of Fed speakers midway. The big key this week, and I'm watching this very carefully right now, is going to be the bond market. Remember I said the bond market is going to try to backtest this or continue moving down. If the bond market starts coming back up right now, that's going to give technology a lot of support. And that's the other thing, by the way, that's looking really good is technology. It's leading today. It's very strong. And if technology starts making swing highs, the odds are broad market is going to follow. So the two things we have going for us is that this is the first official week that traders are back. And the fact that bond market is starting to look at that. It broke the low, trapped the bears as it usually does, and now starting to come back. That's why you can't put stop losses right below the lows like we used to in the old days, because funds will stop you out. Just like what happened on Friday. I warned you this was going to happen. Look, remember I said there's three choices. We're going to break through, we're going to go up, or, and I said this is my favorite one, we're going to go ahead and backdoor this. We're going to trap the bears. Think about all the stops that broke right here, and boom, we're back up. So this is only the second attempt at moving higher. Typically, even if we fail, we usually go midway. So I am expecting more upside, which is another reason why we still are holding long positions, predominantly in the trading pit. And also, I'm also bullish in my mind in terms of the market right now. Not ultra bullish, but a little more bullish than bearish because of the track back we had, and because there's institutions coming in and we don't really have any meaningful data till Friday. And if the bond markets continues upticking, you could see it upticking right here intraday. If we continue upticking on the bond market, that'll relieve more pressure from the stock market, especially interest rate sensitive stocks. And it'll give the opportunity. Notice I'm using my words very carefully. The opportunity or the chance or a likelihood that we will be able to test the high. Although I'm pretty skeptical about that. I'm only looking for a couple of days up in the bond market and a couple of days up in the stock market. I think if we can go back, what was that level? Hold on, let's see here, 473. I think right around here we have to be realistic and see how the market behaves and see how it breaks that level. But I'm fairly confident and comfortable right now holding longs. Not a huge amount of longs, but I'm fairly comfortable with longs at least later in the week till we get some Fed data. I think that some hedge funds are going to be looking at some stocks and broadening the market rally, because the rally last week was extremely narrow, extremely narrow. I mean, like really, really narrow. Okay. We're talking, well, actually, you know what? I'll show you. Why guess? Here, I'll show you what I'm talking about. I showed this in my morning video. It was actually kind of interesting. This is why I like StockFetcher. It's got that time back machine. So look at this. We had 20-week highs right here, right? We right now have 26 high, and the market's fairly strong right now. We had 26. Look at a week ago. 15. Let's look at a week before. That's December 29th. Let's look at a week before then. 50. 50 stocks. How about 50-day highs? 28 right now. Let's look a week ago. 18. Let's look at a week before then. 50. So double what we are right now. Let's go back to today. Yeah, 28. So it's still very narrow, very narrow. If you look at the stocks that are making swing highs, the sectors are they're not broad. It's not a broad-based rally at all. And there's not that many techs breaking out just yet. It doesn't mean a lot of techs are not looking good, and I'll talk about a few. But I would be careful. This is a time to be very cautious. This is not a time for for the gold. Michael says, if algos pull a bull trap, is there a sweet spot for us to set a stop loss to account for that? In other words, do algos typically set a bull trap at a... No, they don't. They don't work that way. They look on momentum levels. They'll look at support and resistance. What they would do is they would put a stop. Here's what they would do. Look, if I understand you correctly, what they would do is they would start raising the market up really hard, and they would have a shitload, excuse my French, of sell orders right above this market, and they would just sell it to you, and you wouldn't see it coming. Although I don't know if that's I don't know if that's the case. I don't know if that's the case. I could tell you that's the case down here because it already happened. I had a theory, and my theory tested out really well. There was a hell of a lot of sell stops right here, taking us down. Right here, trapdoor, right here. There's a trapdoor. This is one of the best trading strategies the last 10 years, trapdoors. Breakout low. And I was telling you guys how algos, it used to be that the second highs were higher. Now the second lows are lower because algos wisened up to the fact that your stop losses are right here. Now, I drew this before this happened, by the way, last week. You can go to my videos and see. But they do this all the time, all the time. Okay, so fairly bullish right now, not crazy bullish, not if we look at sectors right now, just to kind of see where the action is. 6 weeks ago, home builders, retail, real estate, Russell 2000, interest rates, interest rates. This is interest rates are going down. Yay! In the last 5 days, utilities, healthcare, consumer staples, financials. Interest rates are not going down. So it has changed. And by the way, for the record, the odds now are back to uh, 61.5% this morning. And I think they're going to go down to 30%. And I know you guys have heard me talk about this ad nauseum. There's no need to talk about it again. But you guys understand. If you don't understand why, watch. We did a survey here. Remember how many people thought that the Fed is going to lower rates? And so we don't think that. And they keep saying 24, but they're not saying March of 24, are they? Anyways, you guys know what I'm talking about. Okay, let me bring up my charts and talk about some stocks that I like, stocks that I don't like, and all the other goodies. If rates aren't going to drop, why is tech hot? Michael, because bond market is moving up. Look. Michael, I'm saying that rates are not going to drop. I'm not saying that the market's saying that. I think you're making a big confusion between what I'm saying and what the market's doing. The market sure thinks that the rates are going to drop. As a matter of fact, 82%, and now it's 61%. To me, it sounds like the market still thinks. And just to show you how inefficient it is, how long have I been saying this now? For what? A month? Let's see when the market finally agrees with me. And if it happens, maybe it won't. I don't know what you're talking about, Jeffrey. Send me a screenshot so I know what you're saying. Yeah, just because I'm saying something, I'm telling you what I think, and then the market's going to do its own thing. Here's what I said. I said the bond market's probably going to come up here, hit this level, and start coming back down. Yeah, right now, the bond market's tech is loving this. Look, we're moving up. This is no reprieve at all. Yeah, I've been saying it forever. Just because I say something doesn't mean the market's going to cooperate with me. But you know, and I'm always pretty clear about what I'm thinking and what the market's doing. And by the way, I'm always going to go with what the market's doing. Not that's right, John. And this is a time for you to start looking at stocks that are not pulling back. Let me take a quick look at one here. I'm very comfortable with our positions right now, though. I'm extremely comfortable because we have two positions right now that we're holding. Very comfortable. I like our positioning right now. I like the two stocks. One is defensive, one is moving up with the market and is showing very good relative strength. I think I'm happy with where we're at right now. All right. Stocks. First stock, ANF. I like the stock. I don't like the stock for day trading today because it succumbed quite a bit from 99 all the way to 95. But on a daily chart, it looks fantastic. Look at this. Looks fantastic. Looks great. I would like to see it rally a little bit more. I would feel more comfortable if it closed near the highs of the day, but I do like it right now. I do like it. I would put a stop loss right here at about 86.60. I know it's kind of far. If you want to go closer, you could put a stop right here. But the problem is the stock today went from $99, 93. It's got a 5-6 point range a day, so you're going to have to get a little room to it. In terms of the option, I would go 18 days out right now. They're kind of spready, little spready. You would go with the 93 strike price right here. Looks pretty interesting. I'll tell you a funny story when I'm done with all of this. It's kind of funny, actually. You're going to love this one, Matt. Okay, next one is FTNT. Fortinet. Look at that. Look at this move. Nice breakout. There's not a lot of congestion here. breaking out on these levels. Look at the intraday. Absolutely zero pullback. Thank you, Paul. Tell my wife that when I take out the garbage every day. No, I don't take out the garbage. I haven't. The only time I took out the garbage is when she's not home. Oh, I do walk the dogs though. I like walking the dogs, especially Harry. He's funny. He has that doodle smile. That's so funny. Okay, I like the stock a lot. I think out of all the stocks I looked at today, so in the morning I like this one because I like how it's moving up without any degree of coming off. Uh, we like the 56, 57-ish. I would go to about 18 days. Unless I say otherwise, we're looking at January 26th expiration today, okay? Just FYI. And we're looking at the 58 calls right here. They're not expensive. They're actually, you know, they're like 40 cents. If you look intrinsically, they're not expensive at all. Right here. Look at that, 291, a little more, sorry, about 60 cents, 65 cents maybe. But you get the point. All right, I like that one a lot. Look at that. Market sold off, not a lot, but sold off some, nothing. I mean, nothing. That's strong. Very, especially after 12 o'clock. Um, Next one, Win. This one took a bath and now it's coming up and it's above key levels now. Now, I was very surprised again because this stock is very sensitive to China. And if China couldn't get this stock down, that's pretty good. That's pretty good. Right here, I would put a stop around 92. And again, we're going to the 18-day expiration, which is January 26th. And we're looking at the 93 strike price right here. It's only selling for about a buck intrinsically. Let's continue. Backs, backs. Look at this stock. And look at the relative strength on this baby. Whew. That's nice. That's really nice. Breaking out really nice here. It's got a little bump right here, about $2 above the current level. $4 above the current level. So it's still got some play in it. It is definitely being accumulated by funds. The stop loss here would be 37.73. Lori says, I've been trying to go deeper into money on options. Your theory is working, easier to make quick profits. Can you explain for newer folks? Yeah, I'll explain I'll explain to you right now. And the option I would pick would be, oh, the option spreads are horrendous. Horrendous is an understatement. You're going to have to take one for the team and buy the underlying. Okay. So look, you see this right here on the right of the options? This is delta. This tells you the sensitivity of the option for every dollar move. So this option here, you know what? Let me just pull up something liquid like McDonald's. Okay, here. So you could see right here, McDonald's is trading right now. I kind of want to short McDonald's if it breaks this level, but that's for that's a different conversation. So the point is that McDonald's is right now at 287. So let's go in the money. So let's look at right here. Look at this option that expires in 4 days. 277.50. The delta is 1. That means it's 100%. That means for every dollar McDonald's moves, that the option is going to move a dollar. But let's say you want to be a tightwad and a cheapskate, and you buy the option that goes for 38 cents, and you want to be out of the money a little bit. Well, you're only going to get 11 cents for every dollar move. This option's got to make a lot of money. Now, the point, though, is this option costs 36 cents. So if it goes up 11 cents, that's 25%. So it just depends on how you look at it. But generally speaking, my rule is to go in. And folks, if you're in my trading pit, it's written in there. We go the second strike price in the money. So hypothetically, let's say we were buying McDonald's right now. Hypothetically, I'm not buying, I don't want to buy McDonald's. I'd sell McDonald's, but let's say we were buying McDonald's right now. It's at 287. So look, here's 287.50 strike price. I would go 1, 2 in the money right here. Right here. You can even go a little further. And my delta would be 91.91. And I do that for every trade, assuming there's liquidity. Now, sometimes I'll do a scalp like I did on AMD, which we closed out today with a profit. That was, I didn't even have time. I was like, I'm going to do this now. I don't want to be restricted and penalize myself for a good trade because I have to go pick up options. Remember what I said. There's not going to be any rules placed on me in the trading pit. I do what I want. I open positions when I want. I close positions when I want. Nobody's going to restrict me on anything in that room, on anything. Zero. That's the reason why I opened it. I don't want to be restricted. So if I want to do underlying, I'm going to do underlying. And I'm glad I did the underlying because you wouldn't make any money on the option in that scalp. It was just too fast. You'd make like, what, 35 cents? How much money would you make on the option? Nothing. So again, just, listen to what I say. The next one I gave you an option because that may be a swing trade or you know which one I'm talking about. You don't have to bring it up here. There you go, Bob. All right. So let's talk about next one. Moderna. Now, Moderna's coming up with all sorts of stuff. And I like Moderna right now. I think it just went above this level right here. I want to see it. Don't do anything with the Moderna right now. Let's wait for it trades above 115.87. Let's just put an alert at 116. And when it goes to 116, I would put a stop loss right here at 105. And then I would look to buy the 109 strike price or 110 strike price. Yeah. Yeah, that's what I would do. All right, next one. I think I gave you guys this one on Friday. I really like this one. What happened to Bax? Did we not, guys, we didn't discuss Bax? I'll go back, but let me just do Amgen. I like this daily chart a lot. A lot. I'm going to say it again. I like this daily chart a lot. A lot. Okay. It looks really good. And one of the reasons I like it is because you could put a stop loss right here. You don't have to go all the way down here. If this pattern of this congestion starts coming back in its range, you really don't want it anymore. Not on backs. Yes. It had too big of a spreads. Thank you, Bob. Thank you. I said you're going to have to take one for the team. It has wide spreads. You're going to have to buy the underlying. It's only 40 something dollars. It's not an expensive stock. Thank you for reminding me. Thank you for reminding me. Okay. So I like this. I like this a lot. I'm going to look at the stock actually a little later today too. 296 is where I would put a stop loss. And we're going to go right here, 18 days out, January 26th. And spreads are nasty. You're going to have to go a little further in. You're going to have to, I mean, nah, we just can't get a break here. No, the spreads are crappy. See, now here's a perfect example. Let me give you guys, this is a beautiful example. Let's say I'm in the trading pit right now and I really like this stock. And if I was going to look at the option, I don't think I'd give you the option. I would just give you the stock. I'm not going to go into long explanations. But do you understand? I don't like these options all that much right now. Here, I think there's right here. I think we could do this one here. Right here. The 300. But I'm not, I'm telling you right now, they're too spready. They're too spready right now. But the stop loss will be right here. Fifth level, in this case, yeah, I think fifth level. Okay, let's continue. Although I love the stock, it's just sometimes the options just don't, not worth, exactly, Cyrus. They're just not worth the risk. This one, I told you about this stock last week. Remember, it was on our list last week. Yeah, I'm not trying to be difficult. I just want to help you. I just don't want to get you guys in a shitty option. That's all it is. Right here would be the stop. I like the stock. I like where it's going. I like how it's moving. I like it just as much as I liked it last week, if not more, actually, because it now validates what I was saying. And a few people, not a few, one or two people asked me, like, well, what about the fact that it has, if you see a resistance level very close to this, that's more of a pullback than a resistance. I want to see something out here, for 2, 3, 4 months out, not like 20, the same month. That's more of like a, hey, that's just an area. And a lot of times I won't even count the wick. I'll just count the meat of the candle, which is this part right here. I won't even count this right here. So I like this. I like this. I like it. Stop loss right here, 59.49. You're right, John. They are toes in the water today. And we would go, the option we want is not here. So we'll go 11 days out. It's in play right now. All these trades I'm giving you, if they don't give you any soup in a couple of days, get out. Yeah, I use the Heikinashis for confirmations, the 5 minutes and the regular ones right here. We just had a Heikin. This is a here. This is a Heikinashi reversal right here. These two bars, and that's when I called it on Friday. I gave you the stock on Friday. As a matter of fact, no, maybe Thursday. I know I gave it to you last week. I had it on my list, but I do. Okay, so 11 days out, we would go to the 57.50 strike price. Delta is 99. And the option, look at the intrinsic value, 540, and look at the price of the option. It's probably not 539. It's probably a little more, but you could see you're paying nothing for this option. Barely, I mean, maybe 10, 15 cents if I had to guess. Here, 538. Let's just say the offer's 560. You're paying nothing for this option. I like that. I like that. I like that a lot, actually. Okay, let's continue. Let's continue. Oh, my mic is falling. Let me tighten this thing up here. Matt, you and I are going to have to tighten my mic. Hold on a second. Oh, there we go. I tightened my mic.
Got it?
Yeah, I think I got it.
Okay.
Mic is falling apart. It doesn't want to hear what I have to say. Okay, next one. AMD. This is a pullback trade. This is not and again, remember what I was saying, how if you have a resistance level here, that's more of a pullback, not a resistance level. So understand the difference. If this was here, that would be resistance. This is just coming back up, which means it's got a safe zone up to about 151. Now, why do I like AMD a lot? And I mean a lot. I like it so much that I came this close to giving it to you, but I liked the other stock better that I gave you. And you guys know which one it is. But they're both doing really well right now. I like the stock a lot. I would put a stop right here under the swing. By the way, this setup right here that I'm showing you, this goes back to my VIP bootcamp course. This is a setup from a pullback that's regaining strength. You could see the trend right here, breaks. It's moving back up above the averages. Classic pullback. This is the kind of stuff I was doing back in the early, mid 90s, not early 90s, mid 90s. Right here, the 142 right here. That's the sweet spot right here. 11 days to go. If it doesn't move up to the top in the next couple of days, you don't want to be in this trade. You don't want to be in this trade. Okay? Just telling you how it is. I think it's going to catch momentum while Nvidia and other tech stocks are coming back up. At least we have a clear trend. ZBH right here. Love the smoothness of this breakout. I may want to put this in the alpha top stock. Look at that. Nice stop loss right around 119.40. The spreads are just when everything looks good, the spreads look like crap.
Nice little Christmas present every time.
Right? Right? Nice little wrinkle in the what do they call it? The fly in the ointment? Is that it? There's always a fly in the ointment. Every time I find a good looking stock. you could do something with this. It's got 39 days to go, but honestly, that's too much. No, they're just don't force it. Nah, the spreads are nasty. And remember, you got to get out of it too, you know? Richard, I did training on the Hakanashi on the 4 hour course for the Pro Trader dashboard. I talked about it at how I like to see a continuation, one color continuation, and lower bottoms for see these where they have no wicks on the bottom after a change. You want to see two of those. So you see this, you got a nice little uptrend, all green. Then you see a break, and then you see the two double bottoms right here. That means the trend is about to continue. There's my training on the Hakanashis. It doesn't have to be complicated. So you want to see a break, and then you want to see two candles that are higher with flat bottoms. Really, that's what I'm looking at, and it's in that material. Why are your daily charts showing two different prices? Uh, this is not a chart. This is Heikin-Ashi. It's a moving average. This is Hakanashi. This is regular. This is daily, and this is 5 minutes. But Hakanashi is a moving average of price. They're not. They're not. It's not. Doesn't reflect price. And I did mention that in the course too, that you can't gauge price from Hakanashis. You guys should read that 15 pager that I wrote for. It's good. Good. A lot of that stuff is in there. Yeah, if you guys have the Pro Trader dashboard, it would really be helpful. And last stock, DXCM. Look at this. Nice flat top breakout, just the way we like it. But again, healthcare, not a wide based rally, a very congested rally. So here, DXCM 119.25. 11 days till, no, we can go 18 days till expiration. And again, the spreads are shit. But they're not bad here. Okay, you know what? We can go 11 days out and we can go to, let's see what we can do. Nope, the spreads are shit. Excuse my language. What are you going to do? So now, as far as shorts, I gave you a trade. I gave you we closed this out already, so you don't have to worry. I'm not giving anything for free. We broke down here, we closed, we got out. I know all of you who got out made money. If you didn't get out, you could still get out. It's still down 3% on the underlying. So it's still doing really good. But the only stock right now that's lingering on right now is this one. It's LNG. Don't know if it's ready yet. No, it needs a little more downside. It's on my watch list. Okay. It's on the Uncle Roger. Because if it breaks, it can go right down here. Could potentially, obviously. But we need to see a break below 164.36. So when it does that, maybe one of you guys can send me an email and remind me, and we'll take another look at it. Okay. Matt, that's all I've got for today. You got some good seasonality for us? I can't wait. I want to know what's going on with the seasonal market action, second week of the year.
Yep.
Let me know what's happening here.
Got it queued up.
Yeah, tell me. Talk to me.
All right, just let me get my screen shared. Although you might be disappointed, to be honest.
I'm curious, how come more people didn't take XPEV? Like, did you guys miss it out? I posted in the channel. I would imagine like 100 people took it, but or maybe people are shy or what? Didn't trust me? Brett took it. All right. If you guys took XPEV, tell me. No, I'm asking about XPEV. Let's see here. Betty, why are you posting a trade that's currently open in the members area for everybody to see? It's a private trade. I asked you not to do it. I said only talk about trades that we've already closed, not trades that were currently open. It's not fair to folks, okay? It's all good. You guys missed it. I posted it on Telegram. Yeah. All right. All right. Well, some of you made money. That's good. All right. Make sure you get all of those, Matt. Murmus, look at you holding out on me. I never hold out on you guys. I always share. Sharing is caring, right? Nice. Good. And you know, it's great. Everybody took like a roughly 30%. Not bad over the weekend, right? Gotcha. Gotcha. All right, Matt, do the seasonality. Share the screen. Let me unshare my screen. Don't disappoint me. Give me all the goodies, Matt.
Yep. Let me just grab one more of these.
Okay. What camera are you on? Are you on the
I'm on the webcam.
looks clear.
Yeah, it doesn't look too bad.
No, 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 no. It
Yep.
doesn't.
The only thing about it, I was watching the VIP show actually with my wife
Oh boy.
Sunday, and when I move my head, you can tell the frame rate's not very high because I'm very.
Yeah.
But other than that, the picture quality is
That's
pretty
what I
good.
use at my house. I still haven't moved. I have a camera sitting there, but I haven't used it yet. That's great, Brett.
I'm never gonna be able to start.
Go ahead. Go ahead.
I got a few more to grab. Okay. All right. Here is your seasonality. We always start with the sectors. So the first one is the long side. I don't even know what color scheme to describe that as, but it's not green and it's not red. So it's not useful. That's the bottom line. There's really nothing there on the long side. On the short side, we have a few things that could possibly be useful, but then again, the only thing is energy. And if you look at the chart, energy is not doing so good. Now, say natural gas is doing better than oil, but being lumped in together. I don't know what do you think the percentages of the weighting for XLE in oil versus natural gas
Oh, 30, 70?
to oil?
Or yeah, about 30, 70. I think I'm pretty close on that. Because you have a lot of overlap too, you know?
Yeah.
Because you have a lot of the big companies that are doing both. So,
Yeah. Just not lately. Over you have overlap in the company, not in the profit though,
right,
or the price.
right, right. Energy has been the most difficult sector to trade in the last 6 months. It's been just extremely unpredictable, you know?
Very choppy,
Yeah,
especially with options, because occasionally it does follow the long term trend, or it has been somewhat medium term, but the just the drawdown and the timing, it's like it knows it needs to go somewhere, and then it'll just hang around for a little while and then dump it like 5 days later. So it makes it very difficult to manage the positions because you don't know where to put your stops.
right.
10-day hold also pretty flat. We're just in a kind of a consolidated period. But I have a feeling next week that'll start looking different as we start getting into the earnings next week, week after.
Right.
All right. Top long side setups. Yeah, this number is very low. It's 115. So that's a if for context, if you don't watch this every day, I forget that we have some newer visitors. 150, the number we track is how many stocks have a win rate above 70% for today, January 8th. I've seen the number as high as 400, and I've seen the number as low as about 30, 40. That's uh so what is this? 114, that's the average when it's weak, I would say, around 100. You are 100% right, Cyrus. It is its own oil is its own thing. It listens to no one, especially oil company stocks. Sometimes it follows the S&P, sometimes it follows crude oil, sometimes it follows neither,
It genuinely just does its own thing.
which always really perplexes me because I don't understand where they're getting the information from. There hasn't been any new company news releases. but it's being traded on something.
Right. Right.
Alongside, really, there's just not that much that's interesting.
Hmm. Doesn't look like there's much going on right now.
Uh, let's look at the short side. Oops. Yeah, that's what I mean by choppy. If the long side is weak, as we get into a period of higher volume, usually if one's strong, the other's weak. Same thing with stocks versus the commodities. If the stocks are rising, the commodities tend to lag, and then vice versa. You'll really see it on the long short list. But since since Thanksgiving, but really amplified towards the end of last year, it's just been very dull. Uh, VFC might be something to take a look at. It's got a decent amount of trades and XOM. Matt, gold medal showing anything? Yeah, let's take a look at the. Let's go by like this. Oh, nope. We need to use the sector and then we can find our NA. And that shows NA on the sector because it's an ETF. So here's all the ETFs. Most of them are commodities. Uh, yeah, I don't see a lot short. The currencies, they kind of go back and forth.
For anybody who's asking about data miner, they're in their final stage of testing. It's already ready to go. They just want to make sure that it doesn't kill the rest of our
Yeah, they
website.
don't want to make a bomb
That's
and put it on our own website.
it's literally sitting there. They're just making sure the back server can handle the load because it's very high load. So they want to make sure it can handle load. That's all that's doing. So the person who was helping us make it is out of the job. Now it's our folks who have who are stress testing it. So they want to stress test it for another day or two, and that's it. It's done. I'm just telling you what they're telling us. We had a meeting on it this morning. I was so upset. I want it out. I want it. So please bear with us, but it's just a stress test thing now. It's not anything else. We should have gave it to the folks to do the stress test, to see if they could
Well,
break the
the
website.
the problem is that it won't just break the Pro Trader
No, it'll
dashboard,
break
it'll break everything.
everything.
So
Yeah,
you
it'll
won't be
break.
able to get your alerts.
Yeah,
That'll be a mess.
yeah. I don't want that to happen. So
Uh, who asked me? Adam asked me gold medals, anything. I see silver to the short side.
I'm not seeing anything on metals right now. Don't force it out. I'm not seeing anything with metals right now.
Steel, excuse me. I see steel to the short side seasonally, but I don't see any of its friends.
Yeah, you're not gonna get a really strong rally in metals with them anticipating a deflationary year. It's not gonna happen unless we get something unforeseeable. It just doesn't happen very often. What may happen, Adam, is this: if the Fed starts getting firmer about dates instead of saying we haven't been talking about it yet, if they start saying, well, the odds are very low that we're going to have it in March, and the bond market really starts getting out of whack, that could be it. You too, Vivek. You have a great day. So I'm just not seeing a major catalyst for it right now.
Gold on a 10-day hold actually looks decent. 12 trades, 83% win rate, 6 profit factor.
Yeah, yeah. I'm just not loving it right now. I was just looking at it this morning. I was because I look at it about every week or two, and just not there right now.
And silver chugging with it as well.
Yeah,
But
SLV.
see, this is 10-day hold. So
Yeah, silver is very choppy right now, but it looks like it's hitting support. I wouldn't be surprised if silver started moving up a little bit, but again, choppy, nothing crazy. Oh, Kimberly, look at you. Hey, I like that.
nice.
I take it folks are happy today about the trading pit. I'm gonna make an assumption on that. Thank you, Kimberly. I appreciate it. Anything else, Matt?
Nope.
All right. And folks, if you're in the weekly cash flow, I am going to have a trade for you today. We're still going to hold on to Amazon. I see no reason to liquidate it. I'm glad we did what we did again. We gave ourselves just a little bit more time, and it really helped us a lot because we were able to go a little further out and avoid last week's noise. So thank you for being understanding. It's not always about following the rules to a T. It's about making money, right? That's what you guys want to do. You want to make money. That's what I'm trying to help you guys do. So I'll have another position on a little later today. I want to wait for the market to show its hand later on. It's going to come as late as possible. That way, I'll have a much better indication of what's happening. So if you're in that program, you'll be able to. I'll give you a heads up on Telegram, and we'll send you an email and a SMS alert. Matt, since we launched the program, that one losing trade we had when we launched the program, Carvana, we haven't had a losing trade since then. We've been profitable on every trade. Yeah. All right, guys.
On
I
the
will
Pro
see you
Trader
later.
dashboard.
I'm talking about no. I'm talking about
Oh, the cash flow.
cash flow,
I was
cash
gonna
flow,
say because there was
income.
American Airlines.
No. I'm talking about weekly cash flow. Remember Carvana when we launched it,
Yep,
and
yep,
that
I
was it.
remember.
Yeah, that was it. What a nasty one. All
Scary
right,
to
Bob.
do those credit spreads on day trading stocks.
Oh boy, that
The
would
day
be
traders
something
love that stock.
on Carvana.
Yeah,
Yeah, yeah,
they
yeah,
were at
yeah.
the time. They were all over the
It's a
place on
big
it.
momentum stock. Yeah,
Yeah.
Carvana is a big momentum. It moves. It's a big mover. Rochelle says, "Can I get help to get into the trading pit?" Sure, you can. Just contact customer service. Well,
I'll do it for you, Rochelle.
thanks. All right. Bye, guys. We'll see you soon.
Bye, everyone. See you tomorrow.